Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 12th, 2025, and we're diving into MaxCyte's fourth quarter and full year 2024 earnings report. MaxCyte is a leader in cell engineering technologies, and joining us to break down the numbers is John, senior analyst from Smart Stock Watch. Welcome, John.
Thank you for having me. MaxCyte's report is quite intriguing, especially given the shifts in their revenue streams and strategic initiatives. I'm excited to delve into the details.
Revenue and profitability overview. Let's start with the revenue figures. MaxCyte reported a total revenue of $8.7 million for the fourth quarter, which is a significant 45% decrease from the same period last year. However, their core business revenue increased by 20% to $8.6 million. John, what does this tell us about their business model?
It's a mixed bag, really. The decline in total revenue is primarily due to the absence of one-time approval milestones that boosted last year's figures. However, the growth in core business revenue indicates a strong underlying demand for their core products and services. This shift suggests that MaxCyte is successfully transitioning to a more sustainable revenue model, focusing on recurring sales rather than one-off deals.
And what about their profitability?
The net loss for the quarter widened to $10.6 million from $5.3 million last year, largely due to increased operating expenses and a lower gross margin of 74%. This reflects the challenges they face in scaling their operations while maintaining profitability.
Strategic initiatives and SPL program. MaxCyte's Strategic Platform License (SPL) program seems to be a critical component of their strategy. They ended the year with 28 active SPL agreements. How is this impacting their financials, John?
The SPL program is indeed pivotal. While SPL-related revenue dropped significantly to $0.1 million this quarter, the number of active agreements and programs in the clinic is a positive sign. They signed 6 new SPLs in 2024, which indicates strong future potential. The SPL program is a long-term play, and its success will depend on the progression of these programs through clinical trials.
So it's more about future growth than immediate revenue.
Exactly. The SPL program is designed to create a pipeline of future revenue streams through milestone payments and royalties. It's a strategic investment in their future growth.
Operational efficiencies and future outlook. MaxCyte has also been focusing on operational efficiencies. Their operating expenses decreased to $19.3 million this quarter. How does this align with their future outlook?
Reducing operating expenses is a positive step towards improving their bottom line. For 2025, MaxCyte is guiding for core revenue growth of 8% to 15% and SPL-related revenue of approximately $5 million. This indicates a strategic focus on expanding their core business while nurturing the SPL pipeline.
And what about their cash position?
They ended the year with $190.3 million in cash equivalents, and investments, which provides a solid foundation for executing their strategic initiatives and weathering any short-term challenges.
Key takeaways. In summary, MaxCyte's 2024 performance reflects a company in transition, focusing on core revenue growth and strategic partnerships. Despite a challenging year, their strong cash position and strategic initiatives provide a promising outlook. John, any final thoughts?
MaxCyte is positioning itself well for future growth, especially with its SPL program and core business expansion. Investors should keep an eye on their execution in 2025, as it will be crucial for realizing their long-term potential.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on MaxCyte's performance in the comments below.